This is the visual that is sending literal shockwaves through the fortified halls of the U.S. Treasury and the high-stakes strategy rooms in Washington, D.C. this morning. It is a haunting image that contradicts over 80 years of unwavering geopolitical loyalty and fundamentally challenges the very bedrock of the global financial order established in the aftermath of World War II. If you peer closely at the encrypted diplomatic cables currently streaming out of Canberra and the tense, closed-door emergency briefings held at the Reserve Bank of Australia, you will witness something that, until only 6 months ago, was deemed an absolute impossibility as strategic heresy. It is a quiet Tuesday morning on the surface. But for the US dollar, it feels like the onset of a total, irreversible eclipse. Australia, long heralded as the sheriff of the Pacific and America's most stoic, reliable ally, has just rolled out the red carpet for Mark Carney and a revolutionary new economic framework that systematically bypasses the New York clearing system. This is not merely a routine trade adjustment or a standard diplomatic visit. It is the formal beginning of a calculated financial divorce. Good morning, good afternoon, and good evening to our listeners and global investors. I hope you are all doing well, and more importantly, that you are staying prepared. Because the geopolitical chessboard is shifting beneath our feet in ways that the mainstream media is still too terrified to articulate. We often perceive our global alliances as permanent, immovable structures, much like the mountains or the very soil we tread upon. But history's ledger teaches a brutal lesson: when the sovereign mathematics stop adding up, the political loyalty is the first thing to evaporate into thin air. Today, we are witnessing a historic pivot that suggests even America's closest brothers in arms are placing a massive hedge-a-desperate insurance policy against the collapse of the American economic dream. This new pact, whispered about in the secretive hallways of Davos and now finalized in the Southern Hemisphere, represents an existential threat to the greenback's hegemony. It poses a terrifying question to the global markets. If Australia, with its immense mineral wealth and deep cultural ties to the West, has decided it no longer needs the US dollar to guarantee its future, who else is preparing to walk away? What we are seeing is the melting of the world's most precious asset, institutional trust. For nearly a century, the ANZUS Treaty was never just about nuclear submarines, shared military bases, or joint war games in the South China Sea. It was at its core about the seamless, unquestioned flow of US-denominated capital between the two nations. However, the Teflon of the US dollar, that invisible layer of invulnerability that allowed the United States to export its inflation and print endless debt without consequence, is beginning to peel and melt before our very eyes. The recent extreme economic volatility within the U.S. domestic market, the aggressive weaponization of the SWIFT system for political leverage, and the staggering, insurmountable $34 trillion federal debt mountain have finally forced Canberra's hand. The strategic architects in the Australian government are looking at the American deficit and the chaotic, polarized political landscape of the Trump era, and they are making a cold, mathematical decision for self-preservation. By inviting Mark Carney, the man who not only led the Bank of England and the Bank of Canada but is the most vocal proponent of a multipolar financial world, Australia is signaling to every central bank on the planet that they are ready to abandon the sinking ship. They are aggressively exploring digital, sovereign, and basket-based alternatives that do not rely on the unpredictable whims of the Federal Reserve or the erratic executive orders coming out of the White House. This is the Carne gambit. It exploits a burgeoning global sentiment that the dollar is no longer a safe haven, but a toxic liability that carries too much systemic risk. In the glassed hours of Sydney and Melbourne's banking districts, the high-level discourse is no longer about if the dollar will lose its status as the world's reserve currency, but about how fast Australia can decouple its vital organs before the next massive American financial shockwave hits the Pacific coast. Paul Krugman's recent blistering analysis only adds fuel to this fire, suggesting that we have entered an era of asymmetric economic warfare where traditional allies are using trade pacts as human shields to protect their citizens from the impending fallout of American hyperinflation. The technical blueprints of this new Australian pact are designed with the precision of a surgical strike, specifically engineered to circumvent the traditional financial bottlenecks of New York and London. Do not be misled by the dry, bureaucratic language. This is a direct frontal assault on the marginal utility of the US dollar as a global medium of exchange. By establishing a direct settlement system with other Commonwealth nations and the rising economic titans of Asia, Australia is effectively draining hundreds of billions of dollars in annual demand for US currency out of the global pool. Think of the US dollar as any other commodity sitting on a shelf. If the world's largest exporter of iron or metallurgical coal and liquefied natural gas decides it no longer requires that specific commodity to facilitate trillions of dollars in trade, the intrinsic value of that product is destined to plummet. This is the exact supply and demand nightmare that the Federal Reserve has spent decades trying to prevent through diplomatic and military pressure. We are witnessing the fragmentation of the global trade union in real time, just as we saw the sudden halt of construction on the ballroom from hell in Washington or the emergency seizure of properties in Manhattan due to a lack of liquidity. The very foundations of American soft power are being eroded by a profound absence of external confidence. To the Australian public, the government is framing this as a move for national sovereignty and risk diversification. But inside the Beltway in Washington, this move is being interpreted as a betrayal of historic proportions. The U.S. Treasury Department is reportedly in a state of high alert panic, frantically searching for legal loopholes or diplomatic leverage to stop this rollout, but the reality is bitter. You cannot sue a sovereign nation for choosing a more stable bank or a more reliable currency. This is the raw, unadulterated power of the free market, and at this exact moment, the global market is casting a vote of no confidence against the survival of the greenback as the supreme global standard. The psychological impact of Australia's public defiance is, in many ways, far more catastrophic for Washington than the immediate financial loss. When a rival superpower like Russia or China moves to de-dollarize, the market expects it. It is already baked into the risk models, but when Australia, a founding member of the Five Eyes intelligence community, a nation that has bled alongside American soldiers in every major conflict for 100 years, decides to roll out the red carpet for a new economic order, the rest of the world stops and takes notice. It creates what geopolitical analysts call a permission structure. Essentially, Canberra has provided the moral and political cover for other strategic allies such as Japan, South Korea, and even the United Kingdom to begin their own quiet journey toward financial independence. We are looking at a contagion of sovereignty that is spreading through the halls of global power. Mark Carney's physical presence in Canberra acts as a prestigious institutional seal of approval for this transition. He represents the globalist financial elite who are exhausted by the volatility and the America First protectionism of the Trump administration. They are seeking stability at any cost, even if that stability necessitates the end of American dominance in the Pacific theater. We are watching a coordinated silent coup within the world's central banks. They are observing the legal meltdowns in D.C. and the seizure of private assets in New York. And they have concluded that their national wealth is far too precious to be tethered to a ship that seems to be taking on water by design. The Australian pivot is the flare gun being fired into the night sky, signaling to the other whales of the financial world that it is time to leave the harbor before the storm reaches its peak. To truly grasp the gravity of what is unfolding today, we must connect the dots between the recent failures in Davos, the bond market crash in Tokyo, and the image crises that have turned the American brand into a symbol of unpredictability. These were not isolated incidents of misfortune. They were the inevitable symptoms of a leadership style that prioritizes domestic disruption over global systemic stability. Australia's new economic pact is the biological response to that disruption. It is the economic antibody attempting to wall off the infection of American instability. Canberra is building a financial fortress to protect the Australian people from what is now openly discussed in banking circles as the Trump risk. This isn't just about the exchange of goods and services. It is about systemic survival in a post-American world. If the United States enters a period of hyperinflation or prolonged civil unrest, Australia's new independent settlement system ensures that their national economy isn't dragged into the abyss alongside the American Titanic. They are cutting the steel cables of the lifeboats. For the individual investor listening to this right now, this means the safe haven status of the US dollar is being liquidated in real time by the very people who built the system. We are witnessing a massive margin call on the American empire. The liquidity crisis that paralyzed Tokyo only weeks ago is now manifesting as a terminal diplomatic crisis in the Pacific. It is the same recurring pattern, a fundamental loss of trust leading to an immediate and total withdrawal of support. The sheriff has arrived at the door to serve the notice, but this time the sheriff is an old trusted friend informing you that they can no longer vouch for your credit in the global marketplace. What happens to the prestigious Made in USA label when our own closest allies begin a silent boycott of our currency? We have seen in previous cycles how quickly a dominant brand can become toxic almost overnight. The viral Make America Go Away movement is no longer just a trend for Gen Z on TikTok or a protest slogan in the streets of Paris. It is rapidly becoming the official state policy of nations across the Southern Hemisphere. Foreign corporations are already aggressively redesigning their global treasury strategies to scrub the US dollar from their balance sheets. Fearing the Trump tax or the catastrophic risk of arbitrary sanctions that could freeze their assets without a moment's notice. This destroys the American export engine for an entire generation because it removes the structural financial incentive for global firms to deal with US-based companies. If it becomes cheaper, faster, and infinitely more secure to conduct trade in a new Australian-led basket of currencies, why would a merchant in Singapore or a multinational tech firm in Bangalore continue to expose themselves to the dollar? The soft power deficit of the United States is now significantly larger than its actual budget deficit, and Australia just widened that gap to a canyon. They are opening their own diplomatic and financial corridors to the future, leaving Washington behind in a cloud of its own making. The global financial infrastructure is being rebuilt as we speak, and for the first time since the Bretton Woods Agreement in 1944, the blueprints were not drawn on American soil or by American hands. As we analyze the breaking developments of this Australian-led pact, we must confront the most difficult question of our era. Can the global system survive the crossfire between American nationalism and the cold pragmatism of its allies? The entire economy of the United States was constructed on the arrogant premise that the rest of the world would always have an insatiable, bottomless appetite for our debt. But if the world, following the bold example set by Australia, finds a viable shortcut or a reliable alternative, that $34 trillion in debt becomes a ticking time bomb with no off switch. The great American boycott has moved beyond the consumer level. It has entered the vaults of the world's central banks. This is the ultimate high-stakes stress test for the American Republic. Can the dollar survive if it loses its grip on the energy and mineral flows of the Pacific? The economic maps we used in the 20th century have become useless overnight. We are navigating uncharted, treacherous waters where the very architect of the global order has become the primary agent of its destruction. The massive hole in the ground we see on Pennsylvania Avenue isn't just a construction failure. It is a physical manifestation of the vacuum left by the flight of international capital. You need to stay safe, keep your assets liquid, and prepare for a reality where the red carpet in Canberra leads to a world where the US dollar is merely one currency among many rather than the undisputed law of the land, the era of American exceptionalism is being brought to a close by the stroke of a pen on a pact in Australia. History has shown us with brutal clarity that cornered leaders are dangerous, but a cornered currency is an even greater threat to the stability of civilization. You must watch the next move coming from the White House with extreme vigilance. It won't be a simple tweet or a televised rally. It will likely be an aggressive executive order targeting foreign exchange or a desperate, heavy-handed attempt to renegotiate the terms of the ANZUS Treaty under the threat of military withdrawal, but the stain on the reputation of the U.S. financial system remains. Once trust is shattered at this level of magnitude, it takes decades, sometimes centuries, to rebuild. Australia has effectively shown the world that there is a plan B, a viable emergency exit from the dollar-based system. They have turned their back on the institutional chaos of Washington and are building their own monument to regional financial stability. Make sure to like this video, share it with those who need to protect their wealth, and subscribe to this channel. Because while the mainstream media is distracted by the political theater of elections and personal scandals, we are following the money, and the money is leaving the United States at a record pace. This is the controlled demolition of the financial presidency in real time. Thank you for listening to this deep dive analysis. Stay vigilant, stay informed, and remember, in the world of high finance, the silence of your allies is often the loudest warning that the storm has finally arrived. We will continue to monitor the Reserve Bank of Australia's filings and the growing power of the Carney-Krugman alliance very closely. The era of the Teflon dollar is officially over, and the transition will change your financial life forever.